I'm Nicholas Johnston, the publisher of Axios. I'm sorry I'm a little overdressed. We had an Axios event in Washington, D.C. this morning, so I sprinted through the sleet to come down here for BFD. This is a much nicer change of venue and weather, so I'm really excited to be here. I'm hugely grateful for all of you for coming out and for all of our guests for being here today, and also very grateful for our partners who have helped make today possible. A huge, huge thanks to West Monroe for helping bring this entire day together, and so I'm very excited to welcome to the main stage for a view from the top conversation, West Monroe's CEO and Chairman, Kevin McCarty. Kevin, welcome to BFD. How are you? Thanks. So let's start big picture. For folks who don't know, give us your elevator pitch on what West Monroe is and what you folks do.
Yeah, well, beyond letting us sponsor for 3 years in a row now, BFD, we're also a challenger, type firm, and so we like what you're doing here at Axios. So thanks for the opportunity to take the stage with you. Some of you might not have heard of us, but a lot of our clients call us the best kept secret for private equity firms. We do 500 advisory deals a year for all the PE firms that you all know. They're all household names. You might not know the name West Monroe, but we're behind the scenes on some of the largest M&A deals every year in the private equity industry. So what we advise on is everything from, we're known for technology primarily, but also the people and the org, as well as the processes, to challenge the investment thesis that our clients are making on a buy-side deal to determine whether or not we think that the investment thesis can be realized. So we go in there with a team and over a few-week period to analyze the opportunity on behalf of our private equity clients. And we use a multidisciplinary team to do it. So some of our clients refer to us as tech-enabled EBITDA for the boardroom, because we speak the language of EBITDA, which the investors want to hear, but we demystify the tech.
Yeah, I want to go back a little bit more on that language comment. When we've spoken before, you've used the phrase multilingual. Unpack that a little more. What do you mean by being multilingual at an advisory firm?
Well, yeah, if you ever get into a boardroom and there's the CFO there, there's the CIO there, there's the operating partner from the PE firm, there might be the guys that did the deal. They're all speaking often different languages. And especially when you're talking about technology and AI and big data, and then all of a sudden it turns into acronym soup. And the CFO and the board members are not really understanding what's going on. And what we try to do is bridge that with a multidisciplinary, multilingual capability that we have to speak investor talk, but make technology comprehensible to the investment team and the C-suite.
And what is that? That's building teams who can translate financial jargon into something a COO is thinking of. Or is it finding the right kind of advisors who have that kind of background, or building teams that have a bunch of different pieces together?
Well, we have deep technologists that are practitioners, but we also couple that with business value chain folks that look for value opportunities across the value chain, and we couple it with deep industry expertise, domain expertise. So it's almost management consulting coupled with functional consulting with deep technologists that can not just do the analysis, but deliver hands-to-keyboard technology implementation.
So as a child of the 90s, this is my next question. One of my first computers was a Dell, and I know that a big investor in your firm is Michael Dell and his family office. Tell us about that partnership and how you came together with him.
Yeah, we're converting to Dell computers as well. So 2 years ago, we took on an investment. After 20 years in business, we took on Michael Dell's family office, which is called MSD Partners, as an investor in West Monroe. Because they liked what they saw, what we were doing. High growth, digital transformation work for corporate America, as well as the deep private equity expertise that we had in deal making.
And now, so digging a little more into that ownership structure that motivates that kind of decision making too. You're not just a chairman and a CEO, you're a co-founder. And so how does that inform how the company has grown over time? Yeah,
we chose MSD and Michael Dell's family office team because they were receptive to a family ownership, or a family type ownership structure where all of our employees had employee ownership. And I don't mean just the top 5 executives or the leaders in the C-suite. I'm talking broad-based employee ownership. So when we did the deal with Michael and his team, we had 400 of our 1,600 employees became overnight millionaires in the transaction. So we're very proud of that because we believe in employee ownership as a motivator for high performance. If you heard of the rule of 40, where your EBITDA percentage plus your growth percentage should be greater than 40, we were running about a 56 on high growth and high profitability, and that attracted a lot of investors. So that's what I would recommend people think about is if you want to attract investment, you got to have the growth and the EBITDA be greater than 40, and you attract folks like Michael Dell and his team to want to invest.
So on employee ownership, this is not the first time I've been on a stage talking with private equity folks about it. Like, you're not just a practitioner of it, you're maybe almost a proselytizer on it. It's something you really believe in. Can you talk a little bit, share like from your vantage point, how that's taking a hold in other private equity type deals, how other investors are looking at that?
Yeah, the concept of employee ownership along with ESG and sustainability and climate change is all on the agenda for private equity these days. And we really like to work with the private equity firms that will sponsor an employee ownership model. Again, not just with management incentive plan that's geared towards the top 5% of the company, but broad-based employee ownership. So KKR is a good example of somebody that's, I know you hear KKR and you're like, wait a second, this is like the top private equity sharks in the world. How are they all of a sudden employee friendly? And they do. They have case studies now. They're going on speaking circuits around talking about how to include the employee base in the ownership of the upside of the organization, and you get better employee engagement. You get in their businesses. It was a couple, organizations that would have a lot of sick outs and stuff. And when you include people in the ownership, they got more skin in the game. They got more to gain. So they try harder. The employee satisfaction goes up. And the results are an outcome. There's some great case studies that KKR is touting that show the upside of employee ownership.
I mean, like you mentioned, like KKR are great, but I'm sure they're not doing it just for fun or to be friendly. It's a great business decision, and I think that's what you're living as well. It's like, you've seen it as that kind of a model makes people work better and makes companies run better.
Yeah, I mean, our attrition is considerably low for the consulting industry. Our attrition is really world class because of that, and our people try harder. They show up differently than, say, the big firms where people are working for base plus compensation, because here they're working for an equity upside. It's real equity that they own.
Acting like owners. Before we get the hook here, I want to ask one big picture question, just for the deal makers in the room. What are the trends that you're seeing that are super interesting? What's coming over the horizon from your vantage?
Yeah, we did 650 deals in 2021 that we advised on. 2022, that dropped to about 550. 2023, it dropped about 450. So that's down 30% from 21 to 23 deal flow. It's starting to come back. I know it's not a trend, but we're up 7% with January done, and we're seeing a lot of books start to come from the bankers in the market. We're also doing a lot more sell side, not just buyer diligence. We're doing sell side preparedness to get companies ready to come to market, and we've done more of those than ever by a long shot. So the bankers have books that are stacked up that are starting to flow. I think at the end of Q1, they're going to start hitting the street.
This comes up every single BFD we do about there's a lot of stuff piling up in the deal flow. When is that dam going to break? You heard it here first. You think it's coming in 2024?
Yeah, we're seeing it. The sell side mandates for us is up way over 100% over last year on an annualized basis already.
If you're familiar with Axios, before we run out of time, we like to end on one fun thing. Here we're going to do one Miami thing. Aside from the obvious answer, which is that it's sunny and warm, why are we doing this in Miami?
I'm a convert as well from Chicago. 3 years ago, just over 3 years ago, came down myself and to follow the business patterns that were happening.
Not just the weather.
It's not just the weather. It's the business climate down here is getting fast and furious. Our clients are moving down here and setting up offices. So when you work with these big private equity firms, they're starting to open up shops down here. They did it a couple years ago in London, and so we have a UK office that we followed our clients there. And now they're moving down here and setting up business units down here. So that's why we're spending a lot more time down in here. It is, as the mayor said, it's having a moment. Miami's definitely having a moment for capitalism, and we want to be part of that.
I was happy to escape the Northeast this morning and enjoy this moment with you. Kevin, thank you so much for joining us today. Thanks to West Monroe for making today possible.